Welcome back. Now, this year's tax season has kicked off with the SARS opening the auto assessment portal for an expanded pool of taxpayers, which will run from the 1st of July up until the 14th of July. Now, this is SARS moves to earmark the 15th of July as the start of the filing season for provisional and non-provisional taxpayers who are required to file a tax return, with the processes expected to close in October. Joining us now, I'd like to welcome Jaishwal Beju, who is the Head of Strategic and Compliance at Tax Consulting South Africa. Jaishwal, good to have you back on our show. Thank you so much for joining us.
Good afternoon, Faraz. Thank you for having me on.
No, it's an absolute pleasure. So, Jaishwal, we were talking off air. Now, the auto assessment, you did say it is the 500,000 per annum and above. Am I right with regards to that?
And below.
And below, sorry.
So,
okay.
Correct. So, in terms of your auto assessments, something SARS started doing a few years back, and for this tax period, it looks to be only aimed at aiding your lower income taxpayers where there is a single source of income. Now, to be mindful of, obviously, is where you do have any secondary income streams that does need to be declared to SARS correctly and legally.
So Jaishwal, I just want to get this. So if you haven't received an auto assessment, so you've mentioned, of course, the amount, then of course on the 15th you would have to do the supposed manual submission. Am I right?
Correct. So once the filing season opens up in full swing, and we like to refer to it a bit as open season, because there's a lot of shots fired, some of them warning shots, and some of them more detrimental shots, depending on how non-compliant some naughty taxpayers are. Now, once that happens, you have from that date onwards, and as you mentioned earlier, anticipated closing is around October, to file your tax return together with all supporting documentation where needed. This includes the ITB certificates for any investments, as well as your medical aid credits where needed to be submitted to SARS.
Right. Jaishwal, let's talk about SARS as a whole. Of course, it's a classic case of new broom sweeps clean. You've got, of course, the GNU coming. You've got, when it comes to Treasury is still, the same heads there when it comes to the finance minister. But the economics cluster has changed a little bit. SARS, of course, if you look 10 years back, had been going through a lot of difficult times. From your assessment, how would you see SARS right now under the leadership of Edward Kieswetter in terms of his role in making sure that tax revenue, tax collection, and just the running of the revenue service within the country has been done in an effective manner?
So, Fayaz, what we need to consider
it's for us,
is...
Jaishwal. For us, yeah.
Good. It's Jashwin.
Okay,
thank you.
Jashwin, thank you.
Good. So, what we need to consider is SARS is at a place that it has not been in a very long time, and it's a very strong position, reclaiming or clawing its way back up to its prior glory of being one of the top revenue collectors in the world. Now, all of this transformation we have seen under Commissioner Kieswetter. Now, Commissioner Kieswetter, continues to make very strong statements, especially on criminal prosecution, setting good examples, and it's actually not too arbitrary, because if we look at the Financial Action Task Force and their immediate outcome 7, one of the requests is that they see more investigations and more arrests in South Africa for money laundering, fraud, etc. So this is giving force to that, and giving credence to that is SARS bolstering its own powers to monitor and to address non-compliance through channels like your automatic exchange of information, with banks, with crypto asset exchanges, etc. Coupling up with the Companies and Intellectual Property Commission on beneficial ownership disclosures, and then obviously being reinforced by the National Prosecuting Authority when it comes to investigating and prosecuting these tax evaders.
Jashwin, the grey list has been a bit of a big talking point with regards to various firms who have been putting money into South Africa And of course, number one have been escaping the tax man, but second of all, doing this irregular funding of whatever activities that they could do using South African facilities. Um, do you see this economics cluster and SARS now giving more bite or receiving more bite from Treasury and this economic cluster to go ahead and press on these firms wanting to do what they're doing so that South Africa can get off this grey list?
So that's a little bit double-edged sword. And the reason I say that is, yes, we all know that SARS's primary mandate is to collect revenue. And the best way to do that is to allow inbound investment, which will drive up the economy, and therefore there's more revenue to actually cast that collection net into. But at the same time, one of SARS's key objectives, and this has been since probably about 2021, is to increase or strengthen the tax treatment on cross-border transactions, especially with the flow of funds. And that's where you get to things like inbound funding must be endorsed by the South African Reserve Bank. Yes, it boosts our economy. It's great for financial growth for the country, great for SARS, but there has to be some sort of exchange control regulation. Outbound funds from individuals need to then go through the approval for international transfer process, again, verifying and validating the source of those funds, ensuring that full taxation has taken place prior to them departing the shores of South Africa.
Jeshwin, I would like to think all South Africans, if not most, are willing to be a good citizen to go ahead and pay their taxes, and that's been the culture within South Africa. But of course, there are a few individuals, maybe the 1 out of 10, that would say, "Listen, we don't have to go ahead and do this." Um, as somebody who's been practicing tax, somebody who understands tax for many years, you know, talk about the importance of really being tax compliant with SARS, because not only does it allow South Africa to collect this money to build better infrastructure, but I think from a personal perspective, it makes it better for you, doesn't it? And, it doesn't put you on some sort of blacklisted a list when it comes to this.
So SARS has, over the last few years, been continuously building and enhancing their data insights into non-compliance, into nipping it in the bud. Now, in my business, we always say compliance is king. And that's as always your first prize. However, there are non-compliance sanctions that taxpayers, for the most part at least, are not quite aware of. As an example, there is an entire laundry list of actions or inactions, commissions or omissions that may be considered criminal offenses under a tax act, such as not submitting your tax return, submitting erroneous, incomplete, or incorrect information to SARS, not updating registered details. And it's these nuances that sometimes catch taxpayers from left field. And then on the other hand of this, on the other side of the spectrum, you've got your taxpayers that are very deliberate in terms of what they disclose, what they don't disclose, how they move their money, where they move their money, and when they move their money. Now, from a compliance perspective, we have seen SARS ramping up not just the investigations, but how far back those investigations go. I mean, we've seen audits going back 10, 15 years, SARS asking for explanations on line items from bank statements, which in all likelihood, they've used AI to process and generate that Excel report. Now, the taxpayer must remember a transaction, an expense transaction from 10 years ago. In the individual capacity, you've got 6,000 line items or 10,000 line items to address one by one. So that increased scrutiny and that increased focus, I call it their compliance crackdown or SARS's compliance crusade, but that is something that's very prevalent. And where taxpayers are non-compliant, SARS often fire a warning shot, taking the form of a letter of final demand, be it for funds due to SARS, be it for outstanding tax returns, or be it for additional information. And you have a limited time period to then abide by that letter of demand, failing which SARS will proceed most likely with their own estimated assessments or additional assessments, um, or collection measures in the case of a tax debt, which include anything from attaching funds directly from your bank account due to your failure to respond to them timeously, to taking a civil judgment against you, and one day you go and apply for finance and find out you've been blacklisted. So the compliance focus at this stage is at a much higher level than it has been in many, many years. And taxpayers need to be cognizant of the fact that should you fail to meet your tax compliance obligations or any tax obligation under a tax act, there is a possibility of facing either or both criminal sanctions, including prison time, as well as very severe penalties and fines being imposed by SARS. They are making statements week on week. And I mean, we've seen it with all the tax cases, the fraud cases, the debt cases, your celebrity chefs, your VAT fraud syndicates. So they're not pulling punches anymore.
Yeah, I mean, that's a good thing, because we need a compliant citizens along with a revenue service that can function for the country. Jashwan, always a pleasure having you on here on Hilaal TV. Much appreciated. Thank you so much.
Great. Thanks so much.
That's
Cheers.
Jashwan Beju. He is the head of strategic and compliance at Tax Consulting South Africa. That's all we have for you here on News in Focus. From myself, Ross Patel, and the rest of the team in Johannesburg. Assalamu alaikum wa rahmatullahi wa barakatuh.